Welcome to the new era of video creation with AI stock picking. SoFi has massive upside potential. But the tech platform is a headwind. Here are the contents. SoFi Technologies has emerged as a significant player in the financial technology sector. The company offers a wide array of digital financial services, including personal loans, student loan refinancing, investing, insurance, and full-service banking. This diversified portfolio positions SoFi as a one-stop financial platform, which is particularly appealing to younger, tech-savvy consumers seeking convenience and comprehensive solutions. One of the standout metrics from SoFi's recent performance is the growth in its user base. As of Q1 2025, the company reported 10.9 million members, which represents a 34% year-over-year increase. This growth is a testament to SoFi's successful customer acquisition strategies and increasing brand recognition. The company has leveraged everything from social media campaigns to high-profile sponsorships, such as its naming rights for SoFi Stadium, to build awareness and trust. What makes SoFi particularly attractive from an investment standpoint is its diversified revenue model. Unlike traditional banks or single-focus fintech firms, SoFi generates income from multiple sources: lending, student, personal, and home loans, financial services, such as investing and credit cards, and its Galileo technology platform. This diversity helps cushion the company from economic shocks and provides more stability. In addition to its business model, SoFi has cultivated a strong brand image centered around innovation, user-friendliness, and financial empowerment. This identity resonates well with younger demographics and positions SoFi as a disruptor in the financial services space. Altogether, these factors make SoFi a compelling company to monitor or invest in for long-term growth potential. SoFi's current stock price, as of May 5, 2025, is $12.86. This valuation reflects a market that is cautiously optimistic about SoFi's future, pricing in both its growth prospects and the challenges it faces. The company's Q1 2025 earnings report delivered several key insights that are worth highlighting for investors. First, adjusted net revenue for the quarter came in at $771 million, which represents a 33% increase from the same quarter in the previous year. This level of growth underscores SoFi's strong execution and rising market share. Even more impressive is the company's adjusted EBITDA, which reached $210 million, a 46% year-over-year increase. These improvements demonstrate the company's ability to scale effectively while improving margins. SoFi also reported a net income of $71 million with earnings per share at $0.06. While the EPS may seem modest, it marks a crucial shift toward consistent profitability, a key milestone for fintech firms that have often prioritized growth over earnings. Additionally, SoFi's fee-based revenue soared to $315 million, a 67% year-over-year jump. This metric is vital because it shows that SoFi is expanding its non-lending services, making the business model more resilient to interest rate changes and economic cycles. Loan originations were also robust. Personal loans hit $5.5 billion, up 69%. Student loans reached $1.2 billion, up 59%, and home loans totaled $518 million, up 54%. These figures highlight strong demand across various segments and signal that SoFi's products are resonating with consumers. Altogether, SoFi's financials paint a picture of a company that is not just growing, but doing so in a healthy and increasingly profitable way. When evaluating SoFi as an investment, it's important to consider both analyst sentiment and valuation metrics. Currently, the consensus among analysts is a hold rating. This suggests that while the company has promising fundamentals, there may be limited short-term catalysts to significantly drive the stock upward beyond current levels. The average 12-month price target for SoFi is $14.38. Given the current stock price of $12.86, this implies an upside potential of approximately 11.8%. The price target range is fairly wide, from as low as $8 to as high as $20. This spread reflects varying assumptions around future growth rates, interest rate sensitivity, and regulatory developments. Based on current valuation and performance trends, a suggested entry point would be in the $11.50 to $12.50 range. This zone offers a balanced risk-reward profile for investors who are bullish on SoFi's long-term prospects, but mindful of macroeconomic risks. Buying at this level could allow for decent upside while limiting downside exposure. It's also worth considering SoFi's price-to-sales, PS, and price-to-book, PB ratios in relation to its fintech peers. While SoFi trades at a premium to some traditional banks, it is more favorably priced than many high-growth fintechs with weaker earnings profiles. Investors should also keep an eye on any upcoming earnings announcements, product launches, or regulatory updates that could influence sentiment. Ultimately, SoFi is a stock with a compelling story but some valuation headwinds. Entering at a reasonable price point while maintaining a long-term outlook may be the most prudent strategy. Investing in SoFi isn't without its risks, and it's important for potential investors to be aware of these. First, the fintech and digital banking sectors are intensely competitive. SoFi is up against both legacy financial institutions that have vast resources and a growing number of fintech startups that are nimble and innovative. Maintaining user engagement and loyalty in this space is an ongoing challenge. Regulatory uncertainty is another major consideration. As a company operating in financial services, SoFi is subject to a wide range of federal and state regulations. Changes in consumer protection laws, data privacy requirements, or lending standards could materially impact the business. The company must allocate significant resources to compliance, which could affect profitability. Economic conditions also play a key role. Much of SoFi's revenue is tied to its lending operations, which are sensitive to interest rates and consumer credit health. A rise in default rates or a significant economic downturn could harm the company's financial performance. Conversely, interest rate cuts might squeeze margins. Finally, while SoFi has shown impressive growth, scaling operations profitably remains a challenge. It must continue to innovate while keeping costs in check and ensuring that customer service quality remains high. The balance between expansion and operational efficiency will be critical to long-term success. For these reasons, investors should approach SoFi with a well-informed perspective, balancing optimism with awareness of the complex landscape the company operates within. In conclusion, SoFi represents a compelling opportunity in the fintech space, especially for long-term investors. The company has shown consistent growth in membership, diversified its business model, and demonstrated operational improvements that are beginning to reflect in its financials. Its ability to scale, drive revenue, and achieve profitability are all encouraging signs of a maturing enterprise. The diversified business model is particularly important. By earning revenue from lending, financial services, and its Galileo technology platform, SoFi can weather economic fluctuations more effectively than more narrowly focused competitors. This resilience is a key attribute for long-term investors looking to hold through various market cycles. Given the current market price and analyst sentiment, a strategic entry point lies in the $11.50 to $12.50 range. This provides a margin of safety while allowing for meaningful upside if the company continues to execute well on its growth initiatives. Investors should consider dollar-cost averaging to mitigate the risks of market timing. As always, staying informed is crucial. Keep an eye on SoFi's quarterly earnings, regulatory developments, macroeconomic indicators, and any strategic moves the company makes, such as partnerships or acquisitions. These factors can significantly influence stock performance and should be part of an investor's ongoing analysis. Ultimately, SoFi offers a mix of innovation, growth, and evolving financial strength. While not without risks, it is well positioned to benefit from the continued digitization of financial services. For those with a long-term perspective, it could be a valuable addition to a diversified investment portfolio.